Hi and welcome to another episode of Monday Market Outlook. Let's look into what the Philippine stock market has in store for us this coming week. Now, looking at the PSEI charts, last week we identified this as a critical zone for the PSEI, and the ideal scenario is for the index to bounce off of this critical zone so that it can form a higher low, which sets it up nicely for a retest of the 6,750 resistance level. As anticipated, we were able to track the market's movement. So let's delete this line here and see where the market may be headed this coming week. Now, the February inflation report will come out this week. Remember that last month, our inflation was at a 14-year high of 8.7%. Analysts have predicted that this month's inflation report may range from 8.5 to 9.3. However, consensus puts this at around 8.9, which will still peg inflation at a higher figure compared to last month. This means that inflation hasn't peaked. Now, if inflation remains persistent, this may drive investors into cash-rich stocks. No? To name a few, we have SCC, DMC, we have 7, we have Pure Gold, we have GMA7 also. Now, along with persistent inflation, the BSP might come out with another 50 basis points rate hike. Now, of course, high interest rates might also benefit our banking stocks. Looking at our stock pick performance in the last 5 days, we have your BPI, BDO, Union Bank, and Metrobank doing quite well. Of course, you have our China reopening plays like Bloomberry and SSI also on top. Now, SEC lagging behind, primarily being dragged down by Newcastle coal future prices. So we have DNL, Apex, and URC at the bottom of the list. Is it a good time to buy the dip for these? Now let's look at DNL. It's looking like it's forming a base. Now, it would be good for DNL to be able to close above 8 next week. Now, for URC, watch out for URC's reaction to this trend line support as well as 129. Apex chart, not looking good. Lower high, lower low. Looking at gold, we can see that gold is on a rebound, primarily driven by the US 10-year yields dropping last week. Let's see if gold will start to rally this coming week, which will benefit Apex. So we got a slew of earnings reports last week. SM Investments net income up by 53%. Bloomberry Resorts also turning a profit this time around from a 4.2 billion loss to a 5.1 billion profit. Semirara, although hitting a record income of 39.9 billion, this was due to the peak in coal prices for 2022. The question for Semirara here is that with coal prices significantly lower than its 2002 highs, how would their income look like this year? Now, looking at Semirara's chart here, it seems to have found support at 30 pesos. But if it continues to move to the downside and it breaks 29, look at 27, where I'm pretty confident that the bulls might take over. In the past months, we have been bombarded with news of an upcoming recession. But what really is a recession? How do we know that we are in a recessionary environment? So let's check a list and see if these conditions are present in the world economy, especially in the US economy currently, right? So a slowdown in consumer spending. Are we seeing a slowdown in consumer spending? As we mentioned last week, consumer spending is at an all-time high, primarily driven by credit. Credit card balances are at an all-time high. So no, there's no slowdown in consumer spending. Number 2, a spike in unemployment, and along with that, a drop in personal income through job loss. Is there a spike in unemployment in the US? No. Does this look like a spike in unemployment, right? It's actually going down. Does this look like a drop in personal income? No, it's actually going up. We have a slowdown in manufacturing activity. Now look at the manufacturing PMI numbers. It's below 50. Now any manufacturing PMI number below 50 actually means a contraction. So yes, we are seeing a slowdown in manufacturing activity. Are we seeing an inversion in the yield curve? Yes, we are seeing an inversion on the yield curve. In fact, last week, the 2-year and the 10-year yield curve went up again to 1.228, right? So it's on track to challenge its previous high of 1.25. So of the 5 indicators of a recession, we're only seeing 2 of them happening. This explains why the S&P 500 and the US stock market is still up. Now, remember that we are still here, right? So we are still at the point where the Fed is raising interest rates. They haven't reached terminal rate yet. We haven't reached a point where the Fed is maintaining the terminal rate. Now look at what is happening. As rates continue to go up, the market here is also going up. Same situation in 1999 to 2000, right? The market is still going up and rates are going up. Only when the Fed starts seeing the economy go down will they start cutting down on rates. So what's in store for the S&P 500 next week? We have initial jobless claims. Last month, it was at 190,000. We're expecting more people to become jobless at 195,000. Now, average hourly earnings, right? It was 4.4 last month. Analysts are expecting hourly earnings to go up to 4.7. So wages are clearly not going down. Non-farm payrolls, remember, last month, we were expecting 200,000 jobs, non-farm payrolls, but it came out at 517. So people are not losing their jobs yet. Unemployment rate is at 3.4. We're expecting 3.4 unemployment rate again for February. So it's not spiking up. Now let's look into some charts. Let's start with the SPY. We did mention last week that the market may make a move to fill this gap here at 408. And it is currently on track to do that. Now looking at the options here, we can see 410 and 395 acting as extreme zones. So we're expecting the market to move along this range. If it breaks out of 410, we're looking at 413 or 418. And if it breaks down from 395, we're looking at 393 and 383. Now plotting it here on the SPY charts, we can see the SPY on track to fill this gap and might even make it up to 410. However, our movements last week also created a gap along the 399-400 area, which fits perfectly into our maximum pain level, right? So the market may go up, breach 408, trigger some stop losses here, proceed to go down, fill this gap, and then settle at 400. If the market breaks above the call wall here at 410, then it might make a move to 418. If it reaches this put wall here, it might make a move to 392 or 387. So looking at the futures here, we anticipated a move to fill that gap here, and it was able to do so, right? So we can now delete this, and then make some adjustments here. So we're looking at 4.8. We're looking at 410, right? And we're looking at 410. Then we're looking at 395. Then we're looking at 4,000 and 392 here. So for this week, we may see a possible movement up to 410 and a retrace back to the 4,000 level. So that's it for this week's episode. Please like this video and subscribe to the channel for more updates. Good luck on your trades. Please manage your risk carefully, and I'll see you again next week. Thank you.